It's the year of institutional interest. 2024 is the big year. And look, I've been talking about this for 6 years. When the halving cycle occurs, and the halving occurs next April, the block rewards get cut in half for Bitcoin, and the price of Bitcoin basically has to double. And so the more money that gets converted from fiat into Bitcoin, then some of it trickles down to the other parts of the ecosystem. And it's, rising tide lifts all boats. Yep. So a fair value of BTC today, somewhere in the low 50s, according to the, Tim Peterson model, based on Metcalfe's law, which I think is the best model out there. Let's round it to 50 to be conservative. That doubles to 100 in April, May next year.
Bitcoin rally will lead to a speculative blow-off top in 2024. According to Mark Yusko, the chief investment officer and founder of Morgan Creek Capital, BlackRock's application for a Bitcoin ETF has sparked the beginning of a new crypto bull market, which will go parabolic at some point closer to the halving scheduled for April 2024. The market views halving events positively because of its historical effect on Bitcoin. The next halving event is expected in 2024. Some other predictions are less bullish but optimistic nonetheless. CoinKitX forecast says the rally could drive Bitcoin to around $84,100 post-halving. On the other hand, Bloomberg reports feature analysts offering a more conservative prediction of about $50,000 by 2024. Based on Yusko's perspective, Bitcoin's price typically doubles following the next halving event. Hitting $150K in 2024 is a logical projection based on this pattern. With 2 months to go before the U.S. Securities and Exchange Commission faces another set of deadlines to decide on many applications to form spot Bitcoin exchange-traded funds, analysts are speculating on how approval of such vehicles would impact the crypto industry. According to Yusko, the critical date is March 15th. By then, the ETFs either get denied or approved. Now, let's go back to our interview. There's much more to discover. Before diving in, subscribe to the channel and hit the bell icon for the latest updates.
Ultimately, the halving cycle is destiny, right? When the halving cycle occurs, and the halving occurs next April, the block rewards get cut in half for Bitcoin, and the price of Bitcoin basically has to double. Right. So, why does it have to double? Well, if it didn't, then the miners would all go out of business, and we can't have the miners all go out of business. So it's kind of a built-in mechanism for increasing the price. Well, why does that matter? Well, an increasing price attracts activity, attracts notice. And so the more money that gets converted from fiat into Bitcoin, then some of it trickles down to the other parts of the ecosystem. And it's, rising tide lifts all boats. Yep. So a fair value of BTC today, somewhere in the low 50s, according to the Tim Peterson model, based on Metcalfe's law, which I think is the best model out there. Let's round it to 50 to be conservative. That doubles to 100 in April, May next year. We shoot right through fair value in these crypto falls. That we're in crypto summer now till next June. Then we go to crypto fall from June to June following the halving. Then we go to another crypto winter, but that's a long time from now. But in crypto fall, on average, we've rallied about 2.5 times fair value. I don't think that happens this time. I think partly the law of large numbers, partly not as much leverage in the system. So, do we get 1.5, 1.75, 150, 175? Maybe we could get to 200K. I'm going to take the 150 number. Seems like a logical place for us to be sometime in 2024.
With regards to the Bitcoin spot ETF approval, a hard question, when do you think those are going to be approved? I know there's some deadlines.
Second week of January-ish. Okay. I mean, do they push it one more time and go right down to the wire? I think the Ides of March. I think March 15th is the drop dead date. They either have to deny them or they are deemed effective. And I think there's zero chance, when you should never say zero, but I think there's zero chance that BlackRock doesn't get approved. And so Does it happen on the January 15th date, or do they wait till the March 15th date? I don't really know. I don't have any insight. But in both cases, it's before the halving, and you put that event in front of the halving. Ooh, fireworks, baby.
At their most recent meeting, Federal Reserve officials expressed little appetite for cutting interest rates anytime soon, particularly as inflation remains well above their goal. Last month, U.S. inflation fell more than expected to 3.2%, the first decline in 4 months, and consumer prices were unchanged, raising hopes that the end of the U.S. Federal Reserve's monetary tightening cycle has arrived. But, given the role of pandemic-era supply disruptions in fueling inflation, many are questioning whether the Fed's substantial interest rate hikes were needed in the first place. According to Yusko, how people characterize inflation is more aligned with currency devaluation, with a 50% devaluation appearing particularly significant. But he remains optimistic about what's happening in digital assets because of how much people want them and how many there are to go around. Now, let's go back to the interview. There's more to uncover.
What people call inflation, to me, isn't. It's just currency devaluation. We just devalued the currency by 50%. And that was crazy. And so they're trying to clean that up. And so quantitative tightening actually is alive and well. In fact, for the first time in 100 years, just let that hang there for a second. 100 years, we've expanded the M2 money supply. Every month, month in, month out, on average, about 7.5%. I mean, that's crazy. So for the first time, we are now contracting the M2 money supply. So I think it's an interesting dynamic. You know, the bulls are out saying, look, Fed fund futures are predicting, rate cuts next year.
Right.
Well, why would they cut rates? Let's think about this. Only if the economy was sucking. That's a technical term. So otherwise, why would they cut rates? What I think people are confused by is most market participants today grew up in this era of craziness. Right? Zero interest rates.
Right.
And they think that's normal. It's not normal, right? We had a 10-year period following the global financial crisis, and we had about a 7-8-year period in the late 30s and early 40s. That's it. The rest of the time, rates average somewhere between 5 and 7.5% on the short end. And this idea that we're suddenly going to go back to zero rates just doesn't make any sense at all. Capitalism doesn't work at zero rates, right? There has to be a premium paid to lend your capital to someone or to invest your capital in equity. You have to have a return on that invested capital. So, yes, people are excited that, people are predicting Fed cuts next year. But here's the crazy thing. For 13 years, from 2009 to 2000, I guess for 12 years, to 2021, people anticipated that they would raise rates, and they never did, right? And so that group of people that are the experts have not been right. And when it's the Fed leading that charge, they're never right, right? Their own expectations of things like CPI and rates is always off. But that said, I'm really excited about what's about to happen in the digital asset space because of supply and demand, right? We got the Bitcoin ETF, which is going to be approved. BlackRock's going to get approved. And whether anyone else gets approved, I don't know. I'll take the under, but hopefully, I own pieces of 21 shares and Bitwise. I hope both of them get approved. They're both ahead of BlackRock in line, but I'm a betting man, and I would bet both of them get denied, and BlackRock gets approved. That approval is going to unlock $30 trillion of assets in financial advisors who are not allowed to buy digital assets.
The time for debating whether or not we are in a bear market is over. Bitcoin is rapidly approaching its April 2024 halving event. Despite several negatives, such as regulatory threats and confusing sentiments, the long-term bull case is more vital than ever. As U.S. interest payments go by $1 trillion, our embattled government has no option but to use its money printer. The weak currency and quantitative easing in 2024 strongly support higher prices. Is Bitcoin in store for a much more significant upside by 2024? Share your thoughts in the comment section below. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.